Morning everyone, welcome to the end of week news with Ainsley. It's Friday the 28th of January. Hopefully you've all relaxed and getting ready to kickstart your year. February in Australia, hey, everyone finally gets back to work and starts to make the most of it. Today we're talking gold again and how heavyweights are jumping all in. Yet another night of red on the Wall Street and more big names calling for worse to come. Legendary billionaire co-founder of the $65 billion hedge fund, GMO, has come out calling for a 50% crash in US shares, and Goldman Sachs calling trouble ahead and recommending gold as a key investment right now. 83-year-old Grantham last week came out saying he expects the S&P 500 will plunge by 50%, and no amount of Federal Reserve intervention will prevent it. The horse has bolted. He believes the US is now in the midst of its fourth ever super bubble, joining 1929, 2000 and 2008, with the crash now inevitable. This time last year, it looked like we might have a standard bubble with resulting standard pain for the economy, he said. But during the year, the bubble advanced to the category of super bubble, one of only 3 in modern times in US equities, and the potential pain has increased accordingly. This checklist for a super bubble running through its phases is now complete, and the wild rumpus can begin at any time. When pessimism returns to markets, we face the largest potential markdown of perceived wealth in US history. Wall Street giant Goldman Sachs have just come out bullish on gold and calling up to US $2,500 for the safe haven metal. We estimated that if inflation were to structurally move to 4%, gold could hit $2,500 per ounce based on the historical gold inflation relationship. We also estimated that gold would get somewhere close to this level if US gold ETFs would move back to their 2011 highs. Therefore, we think there is considerable upside potential in gold in a scenario where inflation increases significantly. The Marketeer, or TME, gave a good summary and added some charts that are worth repeating here for you. Goldman Sachs, from them. Goldman joins TME in being bullish gold. TME said that it was time to revive the old safe haven asset Monday morning. Goldman joins the call today. GS, or Goldman Sachs, get long gold on weaker US growth and resilient EMS, or emerging markets. In our view, the combination of slower growth and higher inflation could generate investment demand for gold, which we consider to be a defensive inflation hedge. In addition, we expect continued growth in EM dollar wealth and a rebound in consumer and central bank demand for gold. As such, we're raising our 12-month gold target to $2,150 or $2,150 per ounce from $2,000 per ounce and are launching a long gold or COMEX December 22 trading recommendation. That from Goldman Commodities. Things can only get better. Gold spent 2021 in a fundamental soft spot, a combination of strong DM or developed markets growth, underperforming EMs, and a belief that inflation was transient kept gold caught in a fundamental soft spot, facing a fall in demand for defensive assets. Crucially, high growth and seemingly stable prices led to a surge across all risk-on assets, in particular cryptocurrencies. As a result, not only did gold face falling investment demand from investors no longer looking for a debasement hedge, it faced direct competition in Bitcoin as a store of value. Gold consumer and central bank demand has come off in the second half of 2021. Charts show global gold demand, jewelry investment, and central banks. And yes, things can only get better. Gold, the breakout in the making. We haven't seen the shiny metal close here or higher since pre-November shakeout. Gold is getting very tight inside the huge triangle-like formation. There are a few gold bugs around these days, but gold is one of the few assets that has managed to climb higher during the latest market rout. Gold volatility, or GVZ, has stayed depressed. Gold rallies during rate hikes. From Goldman Sachs. Contrary to many investors' expectations, gold has remained resilient during the recent increases in US real rates. In our view, this is due to gold's status as both an inflation hedging and defensive asset. Indeed, Bitcoin fell 45% alongside high growth, loss-making equities during the latest risk-off rotation. Such a divergence between gold and real rates is common when high rates might become a risk to real economic activity, raising the probability of recession and demand for defensive assets. Historically, gold tends to increase during rate hiking cycles, especially and particularly when US growth starts to decelerate and EM dollar purchasing power holds firm. Gold is beginning to disconnect from real rates. Historically, gold tends to increase during rate hike periods when gold's negative correlation with long-term real rates also tends to break down. This is already happening with gold displaying resilience in the most recent increase in US 10-year real rates. Of course, hedge against inflation and geopolitics. And oh my God, all the stars are in line. Gold is such a good hedge against bad inflation. Last year, gold failed to respond to high inflation, which was perceived to be transitory by the market. But what will happen if inflation becomes more permanent? Guess what? It works as a hedge. It's hard to find superlatives for the recent move high in equity volatility. Sure, equities are all over the place as people suddenly woke up to the Fed dilemma. Rates moving, Russia possibly invading, etc. But does that justify gold continue to be boring? Gold volatility is up, small over past sessions, but the gap versus the VIX is now huge. That's news for today. Great insight there for everyone holding gold. If you're not holding gold, it could be a great time to jump on board before it's a little bit higher than what it is now. Jump over to anzbullion.com.au. You can buy anything physical, gold, silver, platinum. Check out all the charts with our news. anzwealth.com.au. Buying that dip, great opportunity there for Bitcoin and a bunch of other cryptocurrencies. And goldsilverstandard.com. If you're after a more portable, secure, and efficient way to buy gold and silver, jump over and check that out. It's a cryptocurrency that's pegged to real gold and silver, held at Reserve Vault and Melbourne Vault. Great product there by Ainsley. Enjoy your Friday and weekend, and we'll catch you on Monday for more news.